Hi there, Chris. Hi there, everyone. And we're going to start with the French carmaker Peugeot Citroën. Europe's #2 carmaker is turning around its fortunes. So says the outgoing chief executive of that company, Philippe Varin. He spoke to France 24 earlier after unveiling a full-year loss to the tune of 2.3 billion euros. Varin insists that the company is getting a handle on its losses, and he points to the fact that the 2013 figure is less than half the loss unveiled for 2012, when the company lost more than 5 billion euros, as you can see right there. In connection with Wednesday's full-year result, Peugeot also detailed a deal that will see China's Dongfeng and the French state each take a 14% stake in the company. The French carmaker is hoping to get a larger footprint in China, and it expects 60% of its growth to come from that market. From now on, the company will have 3 major shareholders with different interests: the French state, Dongfeng and the Peugeot family. That has sparked warnings of future conflicts. But Philippe Varin believes that he's handing over a company in shape, as he will step down as chief executive at the end of March.
What I'm very proud of today is that I will be in a position to give to Carlos Tavares the keys of the car in a fantastic shape.
And if you want to see that interview with Philippe Varin in its entirety, don't forget you can access it on our website, which of course is france24.com. Moving on now, France and Germany want to strike a deal on a European financial transaction tax before May. François Hollande and Angela Merkel outlined that ambition during a joint meeting in Paris Wednesday. Merkel said that a deal before May, when voters will elect a new European Parliament, is quote, a very important signal, unquote. Both leaders have committed to a tax on stock and bond transactions, but the idea is facing opposition from the financial sector. And so far, only 11 European countries, including France and Germany, have expressed support.
There is will on both sides, and this is something which has united us from the beginning, to find an agreement on the financial transactions tax before the European elections.
OK, let's bring you up to date with the stock markets this hour in the United States. With around about 40 minutes or so to go before close, the indices are trading slightly lower. Minutes from the Federal Reserve's latest rate-setting meeting suggests that Fed officials believe that they can continue unwinding their stimulus of the U.S. economy. Not much of a reaction in the stock markets to that, as you could see right there, with only small losses there for the American markets, I should say. This is the European markets. And in Europe earlier, we saw the indices closing pretty flat. The CAC 40 was helped by a strong report from cement company Lafarge. Let's bring you up to date with a few individual stocks, and shares in Crédit Agricole gained as the French bank swung back into black. The lender posted a fourth quarter profit of 612 million euros, slightly less than expected, but it was much better than the 4 billion quarterly loss announced this time last year. Crédit Agricole has suffered because of bets in Greece, Spain and Portugal, but it is now seen to be recovering from those bets. Shares in Danish brewer Carlsberg also popped during Wednesday's trading. It came as the beer maker posted a higher than expected fourth quarter profit. Carlsberg predicts that beer sales will fall this year in Europe and Russia, but it expects continued growth in Asia, where it will focus its efforts. And Britain has reached a deal with Saudi Arabia on the price of a massive fighter contract. That's according to a UK defence company BAE Systems, which will supply the Eurofighter jets. Saudi Arabia agreed to buy 72 planes back in 2007 for £4.5 billion, but the deal got into trouble over rising costs. BAE says the outcome is equitable, but it's not announcing the exact details of the new agreements. In Britain, meanwhile, small businesses are counting the cost of some of the worst flooding in decades. The southwest of England and the Thames Valley area have seen scores of properties flooded, and concern is growing for the tourism industry in particular. February school holidays are due, and Easter's approaching on top of that, but many tourist hotspots remain in deep water. Catherine Clifford has more.
The River Thames laps at the gates of this Windsor hotel. An ominous sign for potential guests. Hotel owners say some guests are thinking twice about going through with visits booked close to flooding.
over February, I think that there is a loss of, you know, maybe 5 rooms a day, maybe something along those lines where people just have been too worried to travel. When we said, yeah, we're safe, we're too far away from it, the hotel itself is high enough up, they were like, oh, how can you guarantee it?
It's a worry for some in the tourism industry that these kind of fears will catch on. School holidays at this time of year normally bring a reliable boost after the winter. In 2012, tourism in England injected almost €130 billion into the British economy, directly and indirectly supporting 2.6 million jobs. For this vendor, though, there's no immediate cause for concern.
I don't think the floods are really affecting anything. You know, like tourist-wise, the season's just starting. Basically, winter time, it's slow in Windsor anyway, so the weather's not really affected anything.
Hoping for the best, communities are joining forces to face the damage. Here in Dorset, locals set about repairing beach huts after the shoreline was battered by storms.
Let's hope they can get back on their feet pretty quickly, Chris.
Thanks, Marcus. Time now for Web News.